Hey, it's Lindsay from Buy, Sell, Love, Durham. Pretty excited about today's video. If you have a mortgage renewing, you're going to want to hear this. These videos, if you like them, they come out every week. Click the subscribe button so you don't miss any. And the content is based on my being one of the top local real estate brokers for 40 years. So you can rest assured the information is factual, it's relevant, and it's stuff that I've worked on. So it's a great idea. So anyways, back to the mortgages. Do you have a mortgage coming up for renewal? If you are one of 1.2 million people that will be renewing mortgages in 2025. Not only that, 60% of all mortgages in Canada will renew before the end of 26, and 85% of those mortgages that will renew were all taken out when the rates are around 1%. So we're going to see some significant increases. Now, a study that was done not too long ago found that 57% of the people that were surveyed said they expect that their value of their mortgage payment is going to go up on a monthly basis. 22% said they're going to be significant increases. And of that 22% that said significant increases, 81% of that group said their household expenses are going to be strained because of the mortgage increase. So this is not stuff to joke about. This is real bank account stuff that's going to have an impact on all Canadian families. So what are the fears out there? So when I look at the fears, when I talk to my clients, typically what they say is this. The fear of taking a variable rate mortgage is the mortgage rates will go up and they'll pay more. The fear of taking a fixed rate mortgage is that they'll lock in at a high rate and the rates will drop. So there's that mix of going, which direction do I go, variable or do I go fixed? Now, typically what I do is when I sit down with a client and they share their fears about what may take place, because nobody's got a crystal ball, we don't know exactly what's going to happen, but the first question that I have is this. How long do you believe you're going to stay in the house? Are you going to be in there 5, 10, 15 years? That's going to have an impact on the choices they make, the decisions that they make around renewing their mortgages. Number 2 is job security. What's your job security? Is your job okay? So as long as you can continue to get paid, you know you're going to be able to make it through the next 1 to 5 years. The other thing too is, and some people need this and it's not embarrassing, but do you need cash out of your house? Because if you do, it's going to have a different impact on how you're going to renew your mortgage. So the solutions that are out there, and there's not a lot of them, but they can be significant in the differences between the two. The number one is, do I take a variable rate mortgage? Right now, a variable rate mortgage, if you take a 3-year, a rate that I just received last week was 4.25%, which isn't too bad. Now, there's nothing indicating the rates are going to go up. I mean, I've seen nothing about that. So to me, I think it's either going to stay stable or the rates are going to drop. So if you've got a variable rate mortgage, which I just renewed one, you're going to actually capture the lower rate as the rates start to shift downwards. Fixed rate right now, the lowest I can find 5-year fixed rate is 4.59%. The big difference between the two is if you take a fixed rate and let's say that the rates go down and you want to get out of that mortgage, you're going to have to pay what's called an interest differential, which is the difference between what you got it at. So in this case here, 4.59%. If the rates go down to 4%, you're going to pay the difference between what the bank is lending the money to you and what they would lend it to the new person over the life of the mortgage. I've seen some of these discharge penalties in the $20,000, $30,000 range. The beauty about taking a variable rate mortgage is the most they can charge you is a 3-month interest penalty. So the worst case scenario is you pay 3 months to get out of your mortgage. So let's assume that the rates started to shift upward. You said, I want to lock in on a 5-year fixed mortgage. Worst case scenario, you're going to pay 3 months interest to get out of that mortgage to get into a fixed rate mortgage. So there are options out there. If you've got any questions, reach out to me, any of my social media platforms, or you can email me. My email address is all over the place. Send me a message if you've got any questions. I'd be more than happy to help you out if you've got a mortgage renewing. Have a great week, all of Canada.